This. All right, welcome to the weekly meeting, 9/14. We shaking and moving. Today, I want to kind of continue the market structure conversation, or the little video we watched last week, because in terms of order blocks, I don't think there was much. I didn't see the one that I'm trading, EURCHF. But if you guys know, I think I've kind of beat the brake shoes off this pair. I've been expecting this pair to go bullish based on the taking of liquidity from the swing low. I do expect this to be, I don't know, over 1,000 pip move. I expect us to come up and take out this monthly market structure shift. I expect for us to go up there and take that out. So whether you believe it'll go that far or not really is immaterial. I think we all believe that it's going to go up. Even if you're just trading based on dumb money concepts, you can see it's a clear push up that ran these intermediate highs and it pulled back. So if we measure the impulse move and the pullback, we'll probably get close to a 78% pullback if you ignore that wick. That wick is only a grab of liquidity, right? This is when they say we should get in the market. This is when we see the liquidity get taken out. This is a super high time frame, so it may throw some people off, but that's just basically what we're looking at. So let's go ahead and take this fib. It pushes up, it pulls back to the 88. And now this week it has created that bullish order block. I've been calling for this thing for so long, y'all might have stopped looking at it. So I finally got the order block that I wanted. If you go down to the 4-hour chart, inside of this, in fact, let me just fib this bullish order block real fast. This is technically how we should be doing it. So the zone of this order block would be just outside this red box. I'm going to extend my red box here so as not to throw people off. I'm going to go ahead and delete the blue one. And I'm going to move my ray to the 78. Okay, so this is how I kind of preach to analyze this order block or whatnot, right? And then what we want to do is we want to drop down to this 4-hour chart, and we want to wait for price to come into our zone, right? And since this is a weekly, we drop 2 time frames down. We skip the daily, go to the 4-hour. We're going to wait till price pulls down to our zone and gives us a bullish order block to go north. Okay, so I still believe all that. However, for this scenario, you might have missed it, and price can still come back, right? We just got our weekly order block, but what I expect, because we're at the bottom of this range, where we have a weekly bullish order block, we have a daily bullish order block, and I suspect that we'll get another bullish candle. I suspect we'll get another bullish candle. I guess it's always possible that this can pull up into this area, come down, give us a bullish order block, and then go. Either scenario is 100% fine, right? I would actually prefer that it comes back first before it pushes up. But on this daily chart, what I really expect to see, whether we pull back here first or not, is I expect to see a series of green candles, right? I expect to see imbalances left as this price pushes out of this area. And maybe it won't be down here. Maybe we have to get another green, red to push out to break this daily bearish order block, right? Maybe we have to do that. And then maybe the expansion starts from this area and we push out of here. But the important thing to understand about this is when you start looking at price moving away from an area, right? Especially if you're expecting this to be a substantial move. You know, if we look over here, we have an order block, we pull back, we don't leave an imbalance. We push up here, we pull back, we don't leave an imbalance. But eventually up here, we leave the imbalance, right? But we don't break the high. So it was a false alarm. This time when we get out of here, if you're expecting to see highs broken, you want to see imbalances left on your chart. And namely the chart that you're monitoring for the move. So the setup was on the weekly chart. I want to see imbalances created on the daily chart, right? And if I'm being honest with you, because I saw this on this 2-week chart, right? I want to see an imbalance on the weekly chart. I want to see a couple of imbalances as the weeks start pushing and we start pushing up out of here, because to me, the liquidity grab happened on this 2-week chart. So maybe this week we're going to get a green candle, and then I expect to see, you know, a few green candles in a row, right? Maybe we have to get a red candle to break through this bearish weekly order block here. But my point is, I want to see a series of green candles, the same way we see a series of green candles like this, because I expect to see imbalances as price pushes out of this area. And I guess I should, you know, tell everybody that just because I anticipate, like, you know, I anticipate things. A lot of traders don't. They react to things. There's nothing wrong with you doing it either way. I just know what I want to see based off of what I think is happening here. If this is truly a liquidity grab and we getting out of here, I expect to see a push. I expect to see an influx of money buying this pair out of here. So it would be natural for me to expect imbalances. With that being said, if I'm adding to my position, I have to wait, because this is the time frame that we monitor our trade on. The setup is on the weekly, entry is on the 4-hour. You manage and monitor your trade on the daily. So if you're adding trades on the lower time frames through here, you have to be cognizant of the fact that, hey man, this is going to pull back eventually. And it's going to pull back on the daily. So probably what's going to happen is we're going to push through here. We're going to break this high and we're going to push into this imbalance. Then you're going to get that wick and price is going to pull back, right? At that point, you can fib this leg, you can get your pullback area, and you can expect for price to come back to your area to add your second position, right? This should be your official add on the daily, not on the 4-hour, not on the 15-minute. So if you're adding on those lower time frames, like many of us do, you have to close those positions at the high, right? Because you should expect for price to break a high and pull back. And if you're not closing them, the least you can do is put a stop loss. Once price passes this area, maybe you just put your stop loss at this high. So if it comes back and hits it, it's not hurting your account when price pulls all the way back to your, you know, to this area. Maybe your first entry is somewhere down here. Maybe you got in, I know a couple of people got in this past week. So those of us who got in around here, this position won't hurt us. If we add through here and price pulls back, those positions will hurt. So you have to manage those positions to get out before the market pulls back. This first position, you know, whether it goes a little bit red or you got in down here and it never goes red, you should be good to go. You don't worry about that first position. But once the market pulls back, now you can add your second position to buy out of here, right? And you manage those positions on this time frame, and you get positions on the daily pullback. If you're adding on those lower time frames, it's okay to do that if you know what you're doing. You just have to make sure you're closing at the next area of interest, right? This imbalance, we break this high, there's another imbalance, so on and so forth. So if you're comfortable with doing that, you could do it. But that's how you really should be managing your trade positions. You guys have any questions? Bray. Okay. No questions. Okay, there are a couple of interesting things happening. So we all know we're about to get this lowering of interest rates on Wednesday. Wednesday, we're gonna lower these interest rates. And everybody knows it. I don't think there's anybody out there that believes that we're not lowering interest rates. But there's a very interesting phenomenon that happened last week. The dollar didn't rise enough, right? But everything is set for this dollar to rise this week. So there has been times in the past where we've gotten the interest rate move and the market does the opposite of what everybody thinks, right? So if I'm you, I'm gonna trade the chart, not what I think the news is going to be. So with that being said, at the very least, I need to see liquidity ran off these two highs, which is this imbalance filled on the dollar. I expect the dollar to push up. If we sell from here, we sell from here. That would be cool, right? I would love the dollar to go all the way up here, but that doesn't have to happen, and it seems very unlikely that it will move that high. But I only say that because the indices did the same thing. The US 30 and the NASDAQ. I had a good sell position in the US 30, and I ended up like missing out on the money that was down here and closing out where I had my stop losses set. Still made money. But the thing that I found very interesting is if we drop down to the 4-hour chart, we took liquidity, right? We took liquidity from this old high and we ran into this order block, right? We filled all that imbalance in this order block, and then price fell away, right? Then this next candle is the inside bar, which tells me that we're at least pushing down. So if you're going to trade the US 30, I expected to push down. This is probably about 190 point drop to this imbalance. I think we're going to go lower than that. Whether you think that or not, just be cognizant that this is a huge candle with a huge imbalance back to the same area here. Then there's another candle with a lot of imbalance, right? And it's totally possible that this could be a double top and we still coming back down here. And it would seem highly unlikely with the news that we have coming out with them lowering interest rates, but many a time we'll get an opposite move because everybody can't come with us on the ride up, right? So the market has to shake people out of it. So everybody who's buying the market on Wednesday when Jerome Powell dropped them rates, maybe it drops first, and then maybe it rises Thursday or Friday. That's happened several times. So whatever your strategy is, all right, and this is the most important piece in my opinion. All of these moves that we've been talking about lately, you can afford to wait for a whole daily order block going your direction because that's how long these moves are going. These moves are going to last for a long time. It's one of the reasons why for this EUR-CHF move, I wasn't sweating it because I had been talking about this buying since price was here. I think my first entry was over in this area, right? Price came back down and went lower. I didn't panic. I sold it. Then once it started pushing up, I closed my sale and I got another buy entry. So just because, like, this is me anticipating because of what I see, right? This was my signal. And I was just anticipating. I wasn't worried about uh, the entry being perfect or how long it took. I knew I could afford to wait. I could afford to wait until I get a daily bullish order block before you get dumb, with your lot size. And then once you get this daily bullish order block, it's on and popping. And then for me, I could see it on the lower time frame because I was actually anticipating this move, right? Once you get this bullish order block and you get this impulse candle, you just enter on that pullback and everything is happening just the way you want to see it. But my point is, if you're trading an indice or if you're trading gold or if you're trading anything that moves fast and you're expecting a major move based off of the US dollar declining, then you probably will be better served if you wait for an order block on the daily time frame, right? Because once you get that order block, now you're confident that this move is happening over the next several days or whatnot. So come up with a strategy that will allow you to take advantage of the news or the direction that you're looking for. And even if you're trading in a direction like, let's say you're late for the party on this EUR-CHF trade, right? And we get another daily bullish order block. There's a good chance that this is not going to pull back, to close the imbalance. So you might be better served than breaking your position up. If you have a 0.40, $4 per pip lot size that you want to drop on this trade, maybe you drop half of it as a buy stop above the price, and you drop the other half on a full pullback entry. That way, if it pulls all the way back, you get in the trade, and if it doesn't, you're still in the trade just with a lower leveraged lot size, right? And again, if that happens and that picks you up, then you're probably better served to either close out at this high or to sell it back down as it starts to sell down. All right. I'm gonna trade it both ways, but everybody is not equipped to do that. And if you're not equipped to do that, it's perfectly fine. Stop trying to do it or do it in your demo until you get that skill set. There's more than one way to skin a cat, right? Which brings me to my next topic. This GA is paying, man, and it moves fast, and it moves a lot of pips. The only problem with GA is you just need to be correct on your direction, right? Y'all know I'm bearish long term. It doesn't mean that I don't trade the up move, right? I mean, I expected it to come here, and it came, right? We got a double top. We pushed down, right? We broke this short-term low here. We broke this short-term low. Now we're pulling back up. I expect us to pull into this area. It might be like 100 pip move or 90 pip move into this area, and I expect to go short again. If you see the market the same way I do, or even if you don't, if you have this buying, understand you can take advantage of these moves. Just make sure you're taking your profit or protecting your account at these areas of interest, right? Because just because I have it going short doesn't mean it's going to actually go short. I mean, just because I believe in my concept doesn't mean that you have to. And the important thing is that you map it out and you do your analysis, right? There is a case and a chance the price could come up here, right? Because if I fib from this wick to this low, the pullback, right? This is the golden zone. This is the 78. So there's a chance that we can go higher. That's always a chance. I'm just trading based off of the structure that's presenting itself, right? And what needs to happen next? Where's the liquidity, right? So I can trade it to the next liquidity level, even though these are short-term trades for me. And that trade, like the EUR CHF, is a long range trade, and so will the US 30 once it pushes back down. And once that news is dropped, and I can get a lay of the land, I will get in those trades for the long push. But if you're not trading on these higher time frames, if you're not position trading or swing trading, and you're trading on the lower time frames, just make sure you're taking your profit. And I know a couple of people hit me up about my analysis, or why I think trade is going long or going short. I can give you my analysis, but your analysis still needs to be on point. And if you don't see it, then if I'm you, I'm not trading it. All right. If I don't see it, I'm not trading. This is another long range trade for me. It's a long range short. And we got a nice pullback a couple of days ago. And, I think 2 or 3 people hit me up asking if I was changing my opinion. And I'm like, hell no. Like, this area has always been marked out, right? This area has an imbalance. See that big imbalance? That's a big candle. There's imbalance. We ran right into that imbalance. So this candle scared people, and then this candle fizzled out. So if you're short-term trading this was a great trade. I think it was over 100 pips. But if you're in a long-term trade, it's you can't hold that. You got to get out, because it hit an area. Even if you expect it to keep pushing, like maybe it pushes down and pushes up again, you have to wait until you get the signal that it's going to push up again, right? Before you just hold that trade. Because if you see the market the way I do, this push down broke this internal low, right? And now we pull back up. If you fib from the top to the bottom, this is a great pullback and a good place to enter another position for a short. I'm still short on EuroCAD. So far, all those trades that wicked out on August 5th are playing nice, right? They're playing nice. So I don't have any reason to believe that they won't play out. And I'm the more that the weeks go by, the more sure that I am that they will all play out, right? Doesn't mean that it's a guarantee, but I believe they will all play out. Do you have any questions? Elfie, you said GJ and gold. Gold need to pull back. Were you in gold buy? Were you in the gold buy? So gold is
I was actually
I'm sorry, you asked what?
I was actually selling the pullback 2 weeks ago or a week ago. I can't remember. But I was just wondering whether
Yeah.
you think it's going to continue pushing or pulling
Well,
back. Because
I
I
mean,
do
it
see
might.
that it needs to
Listen,
pull back.
it might keep pushing. It might push all the way to 2,600. But what I'm telling anybody who's not in this buy, you can't buy. There's no freaking way you can buy here. You can't buy right
Yes,
here. That
yes, I know.
shouldn't be an option. Your option to buy is down here. Right? I mean, you can't buy. Nobody should buy this. Nobody should be thinking about buying gold. If you're not already in, if you wasn't in the gold buy down here, you missed it, and you got to wait.
Yes,
You can short it. But that's a higher risk thing to do. If you're not trading gold, or you're not a trader of gold, you just wait for the pullback, right? Maybe it pulls back to this area. Maybe it pulls back a little bit further, but you can't buy gold right now. It's at an all-time high. Maybe it hits 2,600 before it pulls back. Uh, my quarters theory fellow would probably tell me that 25.75, and maybe it pulls back to at least 25.50 or 25.25. All I'm saying is I'm not I wouldn't look to buy gold until it hit 25.25 based on this chart. But it's been a beautiful thing. And that's another thing that you can probably get in for a long-term hold, once it pulls back. But I know everybody in this group wants to be a trader. They don't want to hold nothing. They just want to trade. And that's cool. But if you don't know what you're doing, you're not making money while you trade. You're just wasting time. But everybody already knows that. These are going to be great times. These are going to be as close to 2020 as we can get. And if you don't know anything about 2020, like if we were real traders in 2020 instead of just learning how to trade or just learning about trading, we could have all gotten rich or pretty close to it by buying and holding any indice, by buying and holding, gold, by buying and holding the JPY trades. But we didn't really have the knowledge or the skill set. Now, hopefully, most of us have acquired that knowledge, at least, even if our skill set is a little bit suspect. All we have to do is wait for the pullback, buy and hold. It's going to push up further, wait for the pullback, buy and hold. We need to be accumulating these positions. It doesn't have to be the huge lot size, guys. Short or small, steady positions adding will create the big lot size for us, right? And over the next few months, your account will really start to gain traction and it will start growing based on the economy. Time will grow the account, not any muscle from us trying to overinflate it. And you can grow your account like that, right? Now, if you're a skilled trader or if you're a decent trader, yeah, you can make all kinds of money, right? Because you can wait for the pullbacks, you can do short-term trades, you can sell pullbacks while you're in longs. There's 1,000 different ways that you can generate extra money. But if you don't have a plan, man, you're just going to blow up your account time and time again. It's a better avenue to take, buying and holding or selling and holding for the dollar, right? Maybe you're buying and holding GU or EU, or maybe you're selling the Dixie or you're selling the JPYs, right? Just come up with something that works and you don't have to spend a lot of time worrying about or watching, right? Because once you get into these pairs that are moving out in the long run, I believe that we're going to have a long period of time. When I say long period, however long this rate cutting cycle is, right? However many cuts they have, if they have 3 or 4 rate cuts, we can probably assume that it's going to take about 6 months to cut 3 or 4 times. I haven't looked at the FOMC meetings, but you figure you're going to have this one in September. I think you have another one in October or November, but they're not going to cut right before the presidential election. They're probably not, but they will cut in December, and then maybe January and March. So think about the last time that they raised rates. How many months ago did they raise? Was the last time they raised rates, right? It was over 9 months. So you can expect that they're not going to raise rates again after the cuts, probably for another 9 months after that. So the market is going to have time to run, right? And then they're never just going to come in and raise rates. Fed Powell is always going to be talking and say, hey, it's time for a policy shift or some crap. He's going to telegraph when it comes time to raise rates the same way he did back in 2021. We had 2 or 3 months. We knew that they were going to raise rates in January. And we knew at least 2 months in advance. So you have time to get out of your longs and position yourself for shorts, or just count your money, or go buy you something nice. Go buy you that Shedeur Sanders watch. Okay, man, this GJ trade, I'm expecting it to buy up a little bit. I expected to buy it with $1. So I don't know how high it's going to go. It'll be great if it bought up 1,000 pips. I don't expect it to do it. But the last time I didn't expect this to fall 700 pips either. So, I'm just looking at what the chart is given. I can't believe that thing fell 800 pips. That's crazy. But at least I would like for it to buy half of that, up to this area. I know there's an order block in these black lines that we can't see. There's an order block here. So to me, if I look at this daily chart, all of this, there's no imbalance until you get up here, right, to the 190 level. So that's the area I would like to see price climb to before it sells, right? It will be really rad and really awesome if it goes to 195, but it ain't going up there, god dog. I'm gonna just go ahead and say it ain't going up there. The ship has sailed on that joker. To me, the JPYs are a double cross, man, because this is totally against the trend. Totally against the trend. I know it's a lot of pips, but I'm not buying JPYs. I'm buying EURCHF because I don't have to worry about it. I can just add to it at this point. And to me, I'd rather have a safe, slow trade that I can put heavy lots than this crap that might sell 300 pips on some news on a Tuesday afternoon, at like 6 or 7 p.m. I'm not doing it. But if you guys doing that, I feel you. I've been there. I've done that. Do y'all know what y'all are trading? Does everybody have a pair that they are trading?
Hey Todd, just a quick question about the interest cut. Does it matter how much they cut them? Like with 25 or 50, does it matter?
Of course it matters. Of course it matters. We should expect a more dramatic move if they cut them more. They're gonna forecast. Let me see what's forecasted. If it says 25. FOMC. All right. So we're expected to go 25 basis points. So if they cut 50 basis points, it'll be a more dramatic move. And there's there's a chance of it doing that. I don't know how great of a chance. I have to look at that website, but to me, I'm just going to trade the chart, especially because the indices move like they did last week. To me, it's a telltale sign that that we didn't go down and take those lows out. Like the trader in me is where it's a telltale sign that this is a 78% pullback, right? We get the wick, we feel the imbalance. Now it looks like this is going to go up. Like the dollar does need to buy. All this stuff needs to buy. But if you were to ask me when the week started last week, I would have thought that all these moves would have happened last week, right? That price would be up in this range so that when they release that news this week, everything can just go ahead and fall off the map. But maybe this stuff starts buying this week and the interest rate stuff come out and the market doesn't really react. Not the way we think it's going to react. Maybe it pushes down and we still climb. And everybody's wondering, like, what's going on? And then the next thing you know, on Friday or Monday, the bottom falls out. That's happened before, right? So this is why I think that if you're trading something, either you're aware that that could happen, or you're just trading the right direction, right? We know that GJ, UJ, and all them JPYs, they're gonna be selling. So if you're buying when this news comes out, to me, that's kind of crazy. Maybe you can buy the first couple of days if that's your plan. But for me, I'm just not doing. I'm waiting. Uh, Maybe if it's up here, maybe I'll sell, get a small sell position before the news. And if it goes a little bit higher, that's cool. But I'm just not buying. I'm not going to be on the other side of the trend. I have a good trade. I have a good trade. And I'm going to spend my time on that good trade. And I don't want to gamble. Like I don't want to be in the Wall Street casino this week. This is my trade right here. Kimmy, are you trading GJ?
Yep.
Are you buying it? Or what do you think about it?
I think it's still selling for now.
You think it's going to break that low?
Huh?
Do you think it's going to break that low?
Which low? Oh, I mean, it might buy up maybe to the little whatever those two little black that zone you have marked up.
Mhm.
It may push up there, but yeah, I'm looking for sales.
Yeah, I
on
wouldn't mind selling it from there because that's a 400 pip move. You know what I'm saying? I mean,
that.
I would look
But
for sales in that zone too.
go
But
to the 4 hour. Oh yeah, I got it selling.
yes, I would sell from here.
Oh, I have it selling to the down to the
It
demand
is
zone.
about
Yeah.
okay. Do you think it'll sell down there and then buy up? My only issue with selling first is the news comes out on Thursday.
Yeah, I don't, I'm, you know,
You don't do news.
I don't do the news.
So you gonna learn that. No. But yeah,
Mhm.
so I get it. I'm not trading any JPY, so I really haven't gave it very much thought. I looked at the chart and I looked at the chart because the indices did what they did. And I really just my thought was, hey man, they trying to trick people.
You said they try to trick people?
Oh yeah, oh yeah. It's a setup, man. This is a classic. It's a setup. And it makes sense because everybody's not gonna catch the move. That's the bottom line. It's gonna be some serious liquidation. Once the blood hit the streets, then they will move. And to me, what I see in that on that US 30 and the NASDAQ, look at every one of these markets, man. Every one of these markets. If I look at this is a sale all day to me. I mean, maybe this is not a sale to y'all, but that's a sale to me. Bearish order block, tap in, sell. Bearish order block, tap in, sell. Bearish order block, tap in,
No.
sell.
Oh.
Hey, I feel you. I mean, everybody has to again. You gotta see it the way you see it, or you can't make your money, right? You gotta see it the way you see it. And this is a bearish order block. We push down. This is a buy up, right? We didn't break no high. I think it's going to sell. Now, everybody, I'm not telling y'all to look at it the way I look at it. Everybody has to look at it the way they look at it. But what I see is it's a setup. Everybody ain't catching it. And you know, it's cool because all you have to do is wait to get that liquidity run. We're not going anywhere far without grabbing liquidity first. And that's how I'm looking at the market, right? If without the grab of liquidity, there won't be much of a move. And it's really as simple as that for me. Everybody has to trade everybody has to trade their style, right? What works for them. But for me, I like to see stuff like this. And then I like to see action after that. Until that happens on the US 30 or on any of these indices, like it just, to me, it's telltale why we didn't break this low. We didn't break this high. All this is just internal range movement last week. So we'll pull back, right? We'll at least pull back to close this imbalance. But if I don't see lows ran, one of these lows got to get ran, then I'm not going to believe, or I'm not going to be convinced that we're buying. And maybe y'all see it a different way, which is cool. All I'm saying is wait until you get what you need to see before you jump in and get destroyed, please, because I believe it's some destruction coming. Like this is the 2-week chart, man. Bearish order block, tap in. So even if you don't believe it, just look at the charts for yourself, man. This right here is a bullish candle so far, but we got 6 days left where this candle could run lower. I want to see this low right here get taken out. Doesn't mean that it's going to happen, but I want to see this low get taken out. And we shall see. If we break the high of here, then that would change my opinion. But because we didn't do it last week, it made me side-eye it, right? Because we pushed up and we could have broken it, but for whatever reason, they didn't do it. And that just gives me a setup. That gives me the feeling of a setup. We could have ran these highs. So, you know, just wait until y'all have y'all's criteria met, whatever your entry requirements are. I don't think it's a doubt that it's going to eventually buy. I'm just trying to keep people from jumping in because we know that the news is going to be released and then get wrecked. We have plenty of time for this to confirm every suspicion. Even if there's a red candle in the next 12 hours and then another one that goes bullish, it's going to pull back. Then maybe you can get in or whatever, right? Whatever your entry criteria is, I just wanted people to be patient because these are going to be long moves, right? On these indices, they're going to go up for many months. Gold is going to go up for many months. So don't feel like you're FOMOing into the move because you want to be the first one through the door. Just be cautious and be patient. That's all I'm trying to say. Any questions? Go. Kimmy.
Yeah, sure.
You got this one selling too?
I haven't looked at that one.
Yeah, I don't like it. I don't like these you know, if I'm being 100% honest.
I mean, the only thing that would make me look for a buy is if there's like a
break.
no, not a break, but like at that zone, a bullish order block that's gonna, it would have to break, you know, above those, above, yeah, I would just need to see some kind of momentum bullish order block.
This field an imbalance. That's not really an imbalance. Yeah, I'm with you. I'm out on these until I need to see them buy up, and then I'll be down for the sale. I just think there are better opportunities in that other trade. This imbalance Scott field. Canada has news this week too. CPI, I believe. We're wicking out at this consequent encroachment. Yeah, y'all be safe, man. Be safe if you're trading those yappies, man. All right, if y'all don't have no questions, bro, I got to go watch. Did y'all watch Texas Longhorns last week? Did y'all watch what we did to the Michigan boys? We didn't say Maryland. What your name is? We didn't say Maryland.
Not what your name.
What's your name? We didn't say Maryland. Maryland. Does Maryland have a football team?
Does Maryland have a football team?
Yeah.
Yeah.
They sure do. We ain't heard from it. That's why I'm asking you.
Well, you're trying to be funny.
Yeah, I'm being real. Maryland in the Big Ten, ain't they? We beat up a Big Ten team with an M named Michigan.
Who is your team?
We beat the brakes off them. Just go Google it. Google it. You know, we ain't hard to find.
Who is we?
The Texas boys.
Oh.
Todd, you still recording?
It don't matter. I mean, everybody understand. Everybody should understand by now that the Texas Longhorns run football. If y'all